My favorite cycle tool is the Future Line of Demarcation, or FLD, and in today's market update we're going to be discussing some other aspects of the FLD, in particular how multiple FLDs combine to create patterns. Here is a chart of ES futures, which are of course based on the S&P 500, and so this is the analysis that we've been looking at for some time. I'm not going to zoom out and give you the bigger picture again because I have been doing that in recent market updates. The important thing, of course, is that we had a fairly major trough forming at the end of October last year. Now you can see I have left all the diamonds on this chart, which at present are indicating that this trough in October was a trough of 18-month magnitude. That is what that yellow diamond represents. There is some debate to be had about the magnitude of this trough. Was it an 18-month cycle trough or a 40-week cycle trough? I mention that because in a moment I'm going to hide the diamonds and we're going to focus on how we can determine which of these two possibilities is the correct one. And the way in which we're going to do that is we are going to consider multiple FLDs on our chart. Let's just quickly finish our assessment of the analysis that we have been discussing in this market for some time. We had the 80-day cycle trough over here, as you can see, in the first week of January. There was a very interesting comment on last week's video, I think it was, that referenced the fact that the 80-day cycle trough in other markets actually formed a little bit later than it did in the S&P 500, and in fact it formed in about the third week of January at the position where we have currently faced this 20-day cycle trough. That's a very interesting observation, and I will soon make a video about the principle of commonality, one of the principles that Hurst defined 50 years ago when he was constructing his theory about how cycles influence financial markets. The principle of commonality tells us that markets move with a great deal in common, which simply speaking means that we expect cycle troughs to occur at the same time in different markets. Usually we expect the same magnitude trough to occur at the same time when comparing to stock markets, for instance, but what does sometimes happen is that you get this kind of displacement where the 80-day cycle trough occurs perhaps a couple of weeks before the 80-day cycle trough occurs in another market. When we take a look at our FLDs in a moment, I'm going to point something interesting out about this, which is why I'm rather dwelling on that little detail. The next thing to notice about this analysis is the circle and whiskers for the 20-week cycle trough, which as you can see is floating over here to the left of the rest of the nest of lows. So the nest of lows of course indicates the expected time for the next trough to form in the market. The longest cycle that is a part of that nest of lows is the expected magnitude of the trough that will form at that time. And here of course we have a 20-week cycle trough that is expected over this nest of lows over here at the beginning of March. I've mentioned that trough many times in recent market update videos. Why is the 20-week cycle circle floating so far to the left? The reason for that is because by placing the 18-month cycle trough over here in October, we have compressed all of the shorter cycles in order to accommodate for the 18-month cycle trough over here. Cycles of 80 days and shorter have now been expanding, which is why their circles and whiskers are at this position over here, whereas the 20-week cycle has not yet recorded any expansion. Of course, these cycles have to work together and they have to maintain their harmonic relationships, and so the 20-week cycle must also be expanding if these shorter cycles have been doing that recently. In terms of what we are expecting, I find it useful to hide the longer diamonds, so let's do that now. Here we are focusing on the analysis only up to the 80-day cycle, which is the level that I am certainly confident in, and so our expectation is that price is going to move down into the next 80-day cycle trough at the beginning of March, the trough that I have mentioned often in recent market updates. The fact that the 80-day cycle trough that formed in the beginning of January and also this 80-day cycle trough at the end of October are clear and fairly obvious 80-day 20-day cycle troughs, we can also state with some confidence that this must be a trough of at least 20-week magnitude, and therefore the trough that we are coming into in the beginning of March must be a trough also of at least 20-week magnitude. And so this is our expectation. If we take a look at the M shape that has been forming in this market, we are of course in the third leg of the M shape, and the next thing that is going to happen, and I'm not saying it's going to happen today, but the next thing that must happen before the beginning of March is that price must come down into the 20-week cycle trough that is expected at the beginning of March. And so we are anticipating a move down into this trough. So where do the multiple FLD patterns come into this? Well, let's display the FLDs for many cycles. There we go. It looks like a bit of a mess, doesn't it? Well, this is all of the FLDs from the 10-day cycle all the way up to the 40-week cycle. Now let me point out something that tends to happen when you are looking at multiple FLDs on your charts. You get periods of time, such as this period over here, where the FLDs are very much mashed together. They are crossing over one another, and they are really a bit of a mess. You will notice a similar thing happening over here, particularly with the 20-week and 40-week FLDs. In fact, if you take a closer look at these FLDs here, you can see the 40-week FLD came down and crossed below the 20-week FLD, then bounced back up again, then came along and crossed below it again, and you've got the 80-day FLD adding to the confusion. On the other hand, you get periods of time where the FLDs run parallel to one another, and they form these patterns a little like this, where you have all the lines staying separate and running parallel, and this is a pattern that Hurst described as a cascade pattern. The cascade pattern is a very interesting one because it provides the opportunity for a fairly strong and continued move. I should point out you get cascade patterns where the FLDs are pointing upwards, which warn of the potential of a downwards move, and you get cascade patterns where the FLDs are moving downwards, which indicate the possibility of a strong upwards move. So how does a cascade pattern work? Here I have zoomed in a little bit, and in order to understand an FLD cascade pattern, we need to remind ourselves of the way in which price interacts with an FLD. You will know from my many discussions about price and the FLD that the FLD will either provide support or resistance to price, or it will provide what we call an acceleration point, where price is expected to cross, in this case cross below an FLD, and generate a target to the downside. A genuine cascade pattern occurs when we are expecting each and every one of these FLDs to provide not support, but an acceleration point where price is going to cross below the FLD, generate a target to the downside, and very importantly, that target will carry price below the next FLD in the pattern. So the way that this works is that looking at the 10-day FLD, if price was to cross that FLD, let's assume it does so tomorrow over here, and let's assume the price comes up and forms another slight high over here, so we are generating a target from this level over here to the crossing point over here, giving us a target over here. Now that is of course below the level of the 20-day FLD. Let's change the highlight to the 20-day FLD. And so in reaching the target generated by the 10-day FLD, price will also of course cross below the 20-day FLD. Are we expecting price to cross below the 20-day FLD at this point in the sequence of interactions? Yes, we are. I'm not going to label them all now, but we are at this point expecting an F category short interaction with the FLD, where price will cross below the FLD and generate a target to the downside again. So let's assume that we do get a fairly quick move down and price crosses down below the 20-day FLD at this point over here. That would then generate a target all the way down here. And again, we follow the same logical process. By achieving that target at this level over here, price will cross below the 40-day FLD. Let's highlight the 40-day FLD. Of course, we don't know exactly at what level price is going to cross the 40-day FLD. Let's give it a little more time, shall we? Let's assume that it crosses below the 40-day FLD over here. That will generate a target just a little bit lower. And again, in order to achieve that target, price must, of course, cross below the 80-day FLD. The important question to ask of each one of these FLDs is, are we expecting this FLD to provide support at this time, or is it going to provide an acceleration point for a move lower again? The answer to that question, in terms of this analysis that we are looking at, is that we are expecting the 80-day cycle FLD to provide an acceleration point. It will be a D category interaction, and I'm going to let you calculate that for yourselves. But in the process of achieving the target generated by the 40-day FLD, price will cross down below the 80-day FLD. Let's assume that it does that somewhere over here. Bear in mind, of course, that we must keep our attention on the concept of time. We are expecting this trough to be reached here in early March. And so if price does cross down below the 80-day FLD, it will again generate a target to the downside. Of course, we cannot calculate the target until we actually experience the interaction. But as a very rough approximation, we are looking at price achieving this level over here. And here you will notice something interesting, because at that level, at this time, we encounter the 20-week cycle FLD. Let's highlight that FLD. So are we expecting the 20-week FLD to provide support for price at this time, or are we expecting the 20-week FLD to provide yet another acceleration point? And here we come to the answer that I mentioned these multiple FLDs could provide us with in terms of the magnitude of that trough in October. Let's quickly zoom out again. Now, here is the puzzle, the solution to which this 20-week cycle FLD is going to provide. Let's assume that the magnitude of this trough here at the end of October last year was of 40-week magnitude. You will remember I mentioned earlier it is of either 40-week magnitude or 18-month magnitude. Let's assume for the moment that it is of 40-week magnitude. That means that this trough in March will of course be of 20-week magnitude. And that, of course, the next 18-month cycle trough must then lie ahead of us. And so what interaction would we expect with the 20-week cycle FLD? I'm not going to go through the full sequence, but I will point out that as price came down below the 20-week FLD towards the 40-week cycle trough, that would be labeled a D category interaction. This interaction over here would then be labeled an E category interaction. What comes next? An F category interaction, where we would expect this FLD not to provide support, but to provide an acceleration point. In other words, price is expected to cross down below the 20-week FLD. If we see price doing that, that will increase our confidence in the fact that this trough was of 40-week magnitude. Let's quickly consider the other option. What if this was an 18-month cycle trough? In that case, this interaction over here in November of last year would be labeled an A category interaction. What would we expect at the time that the next 20-week cycle trough forms here in early March? We would, of course, expect what we call a BC category interaction pair, where the 20-week cycle FLD provides support for price. And so we will find the solution to the question about the magnitude of the trough in October by observing the way in which price interacts with the 20-week cycle FLD. And that is the power of these multiple FLD patterns, because we are able to anticipate whether price is going to find support or resistance or an acceleration point at each one of these FLDs reaching into the future. And that expectation allows us to anticipate price movements. I would like to very quickly revisit the discussion that we had earlier about this 80-day cycle trough that formed in the first week of January. I mentioned that there was a comment on last week's market update video about the fact that the European markets, the DAX I think, and perhaps also the Australian market, formed a later 80-day cycle trough over here in the third week of January. Now, let's consider the interaction between price and this FLD. There is no ambiguity here in terms of the magnitude of this trough. If this trough was a 40-week cycle trough or an 18-month cycle trough, we would have the same sequence of interactions with the 80-day cycle, so we don't need to worry about that question at the moment. Here is our A category interaction. We had a good, strong, bullish move that not only achieved its target, but well exceeded it. What is the next thing that we expect? We expect the 80-day cycle FLD to provide support to price at about the time that the 80-day cycle trough is forming. And that is really what I find particularly fascinating about what happened here. Although we have phased the 80-day cycle trough under this price low in the first week of January, you will notice that 2 weeks later, price actually found support at the level of that 80-day cycle FLD. That doesn't necessarily mean that the 80-day cycle trough must have occurred in the third week of January, but it does raise a few questions about the correct phasing of that cycle trough. And it is certainly possible that the 80-day cycle trough would be better positioned over here in the third week of January, which would mean that this trough that we have been considering as a 40-day cycle trough might only be the 20-day cycle trough. Remember, let me switch on the 20-day cycle FLD. Price found support at the level of that 20-day cycle FLD, which is of course a BC category interaction that we would expect at that first 20-day cycle trough. In recent weeks, I've been giving you preview glimpses of our new Sentient FLD indicator on the MT4 platform, which we are launching in a matter of days now. We're getting very close to the launch of this indicator. I would like to point out what the indicator does. Let's just zoom in on this chart. This is the S&P 500, and of course we have our FLD indicator displayed. But notice how the FLD indicator helps us to anticipate the kind of price interaction that we are expecting at each one of our indicators. You will notice here we are expecting an acceleration point downwards. That is an F category interaction. That is, of course, the 20-day cycle FLD. Here is the 40-day cycle FLD. The colors are different in the Sentient FLD indicator. You can change them to match other color preferences, but these are the default colors that we're looking at here. And here as well with the 40-day cycle FLD, you can see we are expecting an F category acceleration point. In other words, we should expect price to generate a target and keep moving down. Here is the 80-day cycle FLD. I know the colors are a bit confusing. And that 80-day FLD is also expected to provide an acceleration point downwards. In other words, these FLDs are all expected to encourage price to move downwards and generate targets on their way. And this same process is applied to all different time frames. Here is the 4-hour time frame. You can see we have our FLDs on this time frame as well, all indicating acceleration points to the downside. Let's jump to an even shorter time frame. Here is a 30-minute time frame. Notice these two FLDs sitting almost on top of each other. The study of the multiple FLD patterns is a constantly fascinating process because of the way in which these FLDs will tend to overlap one another or occasionally form these cascade patterns. Jumping to the 15-minute chart, you can see these FLDs here are also expected to provide acceleration points to the downside. Although here you will note that a 6-hour cycle target has been achieved at about the time that the 6-hour cycle trough was expected to form, so we wouldn't be surprised to find a bit of a bounce at this point. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server.